Hello and welcome everybody to today's very special session, How to Trade the Brexit Vote, presented by myself, Phil Carr, at the Gold and Silver Club. So we have lots of content to cover with you today. During today's live session, we will of course be covering live market analysis, a complete watch list of trading opportunities, a forecast of where commodities are heading, how we expect the markets will move, and of course answering questions and providing live support. So I'll be able to see all the questions coming through on the live chat. So if there are any questions at all, any comments, any contributions, do feel free to post those during the course of today's session. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking Finance Review, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for further information on the Gold and Silver Club and our expertise, feel free to visit our website, which is at www.thegoldandsilverclub.com. Okay, so let's move over to the highlight of this week is the EU referendum. And what we're seeing now is, of course, voters are heading to the polls. So it is voting day today. The EU referendum is upon us. 47 million British voters will head to the polls today to decide whether the UK should remain as it's known within the European Union, or leave, which is also known as Brexit. So today's vote is the biggest vote in a generation. An overnight poll suggests the results could still go either way. The chances of Britain's exit from the European Union, deemed Brexit, is neck and neck at the moment. So traders are set to rake in multi-billions in profits from this historic vote, which is considered as a unique opportunity for traders, probably not seen since 1992, Black Wednesday, when the UK government withdrew the pound from a European exchange rate system. So we've got the potential for some huge trading opportunities ahead. So traders are getting ready. Investment banks across the world are preparing for a big night. JP Morgan has booked hotel rooms near its offices, while Barclays is bringing in sleeping bags and sending some employees home today so they can get fresh for later on and for overnight trading. Other banks are offering bunk beds, pizza, free-flowing coffee to keep all of their traders awake to trade this historic announcement. Traders are forecast to bet 140 billions on this unique trading opportunity, which is the highest level of cash expected to be invested on a trading event since 2001. The first set of results are expected to be released tomorrow at 12:30 a.m. UK time. So this is going to be overnight as we head beyond midnight in the UK. 1/4 of the votes are expected to have been counted by 3 a.m. and half by 4 a.m. UK time. The final set of results is expected to be announced at 7 a.m. in the UK. So we should have the final decision in by them. Regardless of the outcome, the final result is guaranteed to have a massive impact across the financial markets heading into Friday, and almost certainly across to next week as well, presenting a series of back-to-back profitable trading opportunities. So that's what we're looking at, guys, as we head into this very important announcement overnight and into tomorrow morning. So how are the polls impacting the markets at the moment? Well, as of today, we can see we're starting to see a little bit more of a shift towards the Remain, 48 versus 46% in the Leave camp at the moment. But what we've been seeing very notably over the last 2 weeks here is a very strong correlation between certainly precious metal prices and the polls as well. So when we've seen essentially the odds of the UK leaving the EU increase, so do gold prices. When the odds fall, gold prices have fallen as well. So we saw up until last Thursday, up until the campaigns were put on hold, we saw certainly big surges on gold. We saw increased volatility, increased fear in the market. The polls were shifting more towards an exit from the European Union. And with that, we saw gold we saw gold surge up to $1,315 per ounce. So that was a 2-year high for gold. What we've seen over the last week is we've seen a shift back towards Remain, which is now slightly ahead of the Leave campaign. And with that, we've seen gold sell off, silver has sold off, and we've started to see inflows back in to equities as well. So what we'll do, we'll have a look at the overall correlation of the two of these. So again, we'll be watching this very closely, and of course the impact of the outcome as well. You will want to have a look at this correlation, because of course if we were to see the UK come out of the European Union, this would have no doubt a very positive effect on gold. And if we were to see the UK come out or stay in the European Union, we would then expect a sell-off on gold, but potentially limited downside, which I'll talk you through very shortly when we have a look at the charts. So the volatility index and gold is also an important correlation here. So this is the volatility index on my screen at the moment, also known as the VIX, which I'm sure a lot of you are aware of, but if you're not, this measures fear, volatility in the market. So last week we saw fear increase. With that, we saw gold break out to the upside. We saw equities sell off. We saw the pound breaking down to 8-week lows as well. But over the course of this week, we've seen a shift in sentiment. Fear reduced at the beginning of this week. Gold pull back, silver pull back, and we saw volatility reduce, but it's coming back up again. You'll see it's filled the gap that it created at the beginning of the week. And if we were to see, of course, the volatility index increase overnight and into Friday as well, we could have certainly more inflows again into safe haven. So that will be an important factor to look out for. The way it works is as follows. So most investors, they know that gold tends to rise when there is a sense of uncertainty in the global economy or the markets are volatile. So gold is essentially the fear trade. So when fear spikes, investors, they flock to the precious metals, they push the prices higher. One of the best ways to measure the fear is the VIX, so volatility index. The VIX and gold have a tight correlation. So when the VIX jumps, so does gold. So it's one of the best indicators to confirm when to buy gold and when to sell gold, when to hold off. So you want to watch that very closely. So again, if we were to see the volatility index break down, the VIX started to sell off, break support over the course of the next 24 to 48 hours, that would then, we'd look at the correlation for gold to also do the same. But the opposite is true. If we see the VIX continue to surge, we would expect support for the metals here. So that's one of the indicators amongst several that we use here just to gauge correlations and sentiment in the gold market. You can see here this overall correlation between both of these markets is very strong, the volatility index and gold. Here is the VIX index and the Brexit poll as well. So you can see, as we've seen votes which have moved towards a Brexit, which have moved towards the UK coming out of the European Union, that has therefore caused increased volatility. So with a potential decision that would result in the UK leaving the European Union, that would certainly impact volatility. It would create more uncertainty in the market, more fear in the market. You would see the VIX, the volatility index, get bid up, and you would also see gold and silver bid up in that scenario as well. Investors have continued to buy gold at a record pace, which was interesting. Right into the close last Friday, we saw inflows into exchange traded funds. They were at double the normal, they were at a level which is double what you would normally expect in terms of inflows over the course of the previous days into exchange traded funds. Now, in terms of gold demand, we've seen a shift from money managers, institutions, hedge funds. We saw them right into the close on Friday, as noted by the commitment of traders. We saw a significant increase to a record high of 240,862 lots, okay, ahead of the Brexit vote. So what does that tell us? It tells us that we've seen extreme investment demand coming back into gold on the pullback last week. So we saw gold break out to $1,315 per ounce. It then sold off quite violently down to $1,280 per ounce, which was a 350-point pullback, which was quite significant to get that in one day. And then we saw gold get bought back into the close, closing with its highest level so far in 2016. It closed at $1,299 per ounce. There's a lot of investment demand which remains in the gold market at the moment. Another point to consider is there are two other factors at the moment which have also caused this breakout to the upside in gold. It's not just fear and uncertainty regarding the UK potentially coming out of the European Union. What has also bid up gold was the worst non-farm payrolls in nearly 6 years, which came out at the beginning of June. So that's been a factor. And also the dovish FOMC statement that we had last week, which also gave rise to a breakout in gold. Those two factors haven't changed. So there's still overall sentiment in the market for gold is bullish right now. But of course, we are, and we're still seeing pullbacks being bought into. But of course, we are waiting a decision from the vote, which we should get, of course. This time tomorrow we'll have that decision, but it will be coming through over the next 24 hours here. So what does that mean for gold? We'll take a look at the chart very shortly, but ultimately the very strong investment demand that we've seen, the pullbacks that we're seeing bought into, would suggest that gold's downside, it could have a knee-jerk reaction and sell off if we were to see the UK stay within the European Union, could have a knee-jerk reaction and sell off, but it does suggest we'll get supported by the amount of investment demand that we're seeing on every single pullback at the moment. So it's something to bear in mind, and I'll talk you through that a bit more detail when we look at the gold chart, but certainly the inflows have been strong. We've seen the lead up to the EU referendum, the British pound volatility is back at its 2008 level, so we've seen increased volatility in this market by almost 63% in the last month to hit levels not seen since the global financial crisis in 2008. So we've seen a lot of volatility in the Forex markets, and that's no doubt going to continue right the way through until the end of the week. And also, oil price and the Brexit poll is also quite an important correlation here as well. This is an inverse correlation. What we've seen over the last 2 weeks here is when we saw, again, more polls showing in favor of a leave vote, that had a direct impact on oil price, where we saw the oil price go down. A slowdown in global economic growth would lead to lower oil consumption, and that is one of the reasons that we've continued to see as the polls have favored a Brexit, a vote for a leaving of the EU, that has seen oil price break down. And when the odds have favored a Remain vote, we've seen oil prices go up. So we've seen essentially oil prices go up from Friday last week, and they've continued to follow through over the course of the last few days here. Now, for those of you who've been following our sessions for a while at the Gold and Silver Club, you'll probably be very aware now of a lot of the opportunities that we identify on the softs and grains. We've certainly seen significant inflows into these markets in 2016. They're still trading 60% below their 2011 peaks relative to equities. We've seen actually quite a nice pullback in several grains over the last week, which includes soybeans, corn, and also wheat as well. So we've seen some good pullbacks on those markets, which now are actually at prime opportunities for buys once they get confirmed. We've seen overall this sector explode this year. We've seen currently actually soybeans is up 27% for the year. Up until last week, it was up 34% of the year. Corn was up 18%. Year to date last week, it's up in the region of 8% at the moment. We've seen some runaway moves, certainly sugar as well, up 29% year to date, coffee up over 7%. We've seen some runaway moves in the agricultural complex. Growing global populations, concerns over supply, they've been driving prices to their highest level since 2003. Softs and grains are officially back in a bull market, and they're less also affected by the Brexit vote too. So what we could see here is, again, additional smart money moving into these markets. We've seen hedge funds selling equities at a record pace to buy softs and grains over the course of this year. We've continued to see very strong inflows. We've seen hedge funds increase bullish commodity bets to a 2-year high of 1.15 million lots. Our research shows us that commodities are certainly back in demand, with hedge funds increasing bullish net long positions to their highest level since 2004. Soybean and sugar have fared the best over the course of 2016. Okay, so I really wanted to put that together for you guys, go over some research with you as well. And what we'll do now, we'll have a look at the charts and we'll talk you through what we're expecting now as we head into the vote, after the vote, and in the weeks to come as well. So we'll start off with gold. And again, if there's any questions or comments, please feel free to put those into the chat. Okay, good. Right, the first market we'll start off with is going to be gold. So a few points I want to note here with you. So if we have a look at the overall price structure of gold, just be aware that the breakdown that we've got over the course. So up until this point, into mid-May, we had rallied in the region of 21% year to date. Okay, so we'd rallied up 21%. We then, on the back of the minutes of the FOMC in mid-May, where the Federal Reserve, they indicated they could be ready to increase interest rate hikes as soon as the June FOMC statement, if not June, the July FOMC statement. We saw a huge rally on the US dollar, and this, we then saw a correction on gold here. So we pulled back quite significantly on gold. It pulled back from its highs over 1,000 points. So it's a $100 move for gold, which was quite significant for those holding longer term positions. We saw various funds and money managers come out of their long trade here. However, we then saw at the beginning of June a surprise to the markets, the worst non-farm payrolls in nearly 6 years, which completely changed the sentiment of the Fed. They were no longer in a position to increase interest rates as soon as June. In fact, the chances of them doing that after the non-farm payrolls reduced to 2% chance. We saw very strong inflows. This is where, again, hedge funds, money managers, they scrambled to build back their long positions at this point, and we continue to see good follow through to the FOMC statement, and also with the more recent sentiment within the European referendum, where we've seen sentiment over the last couple of weeks here be more in favor of a potential leave, but the shift has changed over the last few days, but that continued to help this surge. And then we also had a further breakout to the upside last week. We came up to 1,315 US dollars per ounce after the Federal Reserve FOMC statement confirmed there was going to be no interest rate change. So that brings you a little bit up to speed with where gold has really moved over the last 6 weeks here. And at this point in time, as of the close on Friday, when we got this pullback on gold, instead of following through immediately on a bull trap like this, which is what you would expect it would break down to the downside, on Friday we saw very strong inflows as well, from ETFs to hedge funds to money managers, bringing it up to the best close here on gold. You can see, although it dipped above 1,300 several times, it didn't close with such a good close on the previous occasions. 12.99 is the best close that it's had all year, so that does bode well, and that was only on Friday last week. So what does that tell us? It tells us right now that the pullback that we're seeing on gold at this point in time, it is likely again to get bought back into. The question is, how far will it pull back if we were to see the UK remain within the European Union, which we would see essentially back to the status quo on the markets here, particularly on gold. So what sort of impact would that have? Well, the move that we got here from the 1,200 levels upwards to the 1,250 zone, that came as a result of the non-farm payrolls. So that huge surge that we saw to the upside. So realistically, we are either, you've got some nice trend channels here at the moment on gold. We could see a shakeout. So we could just see a shakeout here with gold, where if we were to just see some big volumes come into the market, big sell-off, we could see a short-term shakeout. But I suspect here on gold, we're not going to see a shakeout to the degree where it's going to break down, take out its swing low and break below the 1,200s and be the start of a much larger correction. I would suggest that is unlikely at this point in time, but you never know. We're in uncharted waters here, in uncharted waters. However, if we were to see a breakdown to the downside, so if we did get a very significant sell-off which closed below the swing lows here and also below a 200-day moving average, if we got that sort of a move, yes, a bigger correction is likely in the short term. What I'm looking out for here is, if we do get a further shakeout here to the downside, is to see where buyers come back into the market. So if we do see big institutions, hedge funds, if they're buying back into this, they're looking at it as an opportunity to load up at a better price here, because gold has really turned the corner in 2016. It's turned into a bull market from a 4-year bear market. We've seen significant upside. It's up at its peak there, 24% year to date, only 6 months into the year. In fact, it was up over 20%, only 16% it was up in the first 3 months of the year, and the first 5 months of the year it was up over 20%. So far, pullbacks have been treated as buying opportunities. So I'm looking at this in two ways right now in the short term. A pullback to the lower end of the trend channel, giving rise to potential setup at this zone, which could give us a good buying opportunity, but I would wait. I wouldn't want to catch a falling knife if we were to just see gold breaking down. It has got a V-shaped reversal pattern. It's got some strong underlying support, but if it does continue to break down, I would not catch a falling knife. I would wait for it to give us a buying opportunity, a setup. Or if it continues to consolidate around the 1255 zone, the 1260, if we were to see an unprecedented move, and of course the UK come out of the European Union, then that would see gold very likely an explosive move to the upside. I've showed you the correlation. The volatility index would skyrocket, fear in the market would increase, We would therefore see also this strong correlation between Brexit polls showing if we go with an exit, that it's very supportive for the gold price. That is where we're very likely to explode with gold, and gold would then follow through, break initially above the weekly or the daily highs over the last couple of days. We would breach above the 1280 zone, and then we would be looking for a run up back towards the 1315 zone. And beyond that, you'd see buy orders, of course, get filled, and you might see a lot of buying continuing overnight as traders continue to add to this trade. 1350 being the next major overhead resistance, and on the larger sort of time frames here, you've got the 1380 to 1400 zone, which would be targeted. That would be a big ask to achieve that within a couple of days, but over the next few weeks, if we were to see the UK come out of the European Union, that could be the potential upside target there. So that's really what we're looking at on gold at the moment. So I perceive this right now as downside. We could get a volatile shakeout on the UK staying within the European Union, so we might see some more shakeout, just a shakeout of speculator positions here, but then those positions could get bought back. Any sell-offs could get bought back into in these major buy zones, which I would suggest is between 1200 to 1250. That is, or 1260 actually, where we're sitting at the moment. On the flip side of that, if we see gold maintain around this current level of support right now, you could argue there is also an additional trend channel here. We could just draw that in at the moment, where we're seeing just gold continue to move between these channels. If we do see this level supported at the moment, we could just see a rotation back up beyond the 1280 zone, breaking out and following through to the upside and continue to rally above the 1315 level. So ultimately, that's what we're looking at on gold at the moment. If there's any questions on that, do feel free to post those. If we move over to silver, we've been long silver here for a while. Silver continues to move really well. Silver at the moment, over the last week or so, has just continued to consolidate. It's holding up better than gold at the moment. There is price, in terms of the overall price structure, this is a V-shaped reversal pattern, okay? So typically when the neckline of a V-shaped reversal pattern breaks down, you'd get a similar breakdown in price to the breakout, to the previous breakout. So that was a very strong candle, which led to a breakout for this V-shaped reversal pattern in the first place. So what it could do is give back these gains and come back for a retest of 1635. That is the potential downside if silver was to break down. And again, we would look at buying opportunities at the lower end of that trend channel. We'd look for supported bounces at that zone to take it back up. If it was to breach below that level, if it was to take out its key swing low here, which is sitting at 1580, broke below that level and continue to follow through, no, we wouldn't continue to buy that. We would look elsewhere. But at the moment, silver, it's still holding up quite well. Again, if it does surge above $18 an ounce, if it surges beyond last week's high from the FOMC statement, that's likely to fill a lot of orders as well, and that could really begin to rocket too. So again, very similar to gold in terms of what we're anticipating here for the next move. Now, if we move it over and have a look at the grains, I perceive these markets as looking very interesting right now. You'll note that corn has actually had a 50% Fibonacci retracement now. It's just pulled back after the USDA reports, which went back about a week and a half ago now. We've continued to see corn consolidate after that. It had a strong close on Friday last week, but this week we gapped much lower. We've continued to break down. It's been quite a significant pullback, but again, the grains here have seen a lot of strong inflows this year. In 2016 by hedge funds, we've continued to see strong investment demand. It has turned the corner into a bull market from a bear market. Corn is now up 7% this year, even with the pullback, the 50% pullback. So I'm looking at buying opportunities on the grains, which will be more isolated and not directly affected from this vote as well. So as we come into next week, I'm looking for opportunities. There's a USDA report later on next week as well. I'm looking also soybeans, which has been the second best performing commodity this year after soybean meal. It's been up 34% this year. It's been a runaway market. There's a pennant formation on this market. If it breaks above resistance, if it provides us with a setup, if it just halts at this point in time, there is an opportunity here for soybeans as well, which we're looking at. And wheat too. Wheat is actually back in a supportive zone where we could look at a buying opportunity, although wheat over the grains of between wheat, corn and soybeans, wheat is the weaker of these markets. It's down about 5% so far in 2016, although it did get into the positive earlier on this month prior to the USDA report, but it's subsequently broken back down. It's had quite a significant pullback following on from the USDA report, the US Department of Agriculture And with that, we've seen quite a significant pullback. So wheat also monitoring here, but I favor corn and soybeans at the moment for more upside. Other markets, I would keep an eye on cocoa. We've actually got positions on cocoa. Cocoa is firing off here to the upside. It's just broken above resistance here. Again, cocoa will be less directly affected from the Brexit vote. You can see from a technical point of view, it's just breaching above its certainly last three. You can see it's actually breaching above its 2016 highs just today. It's starting to get going. It's got quite a lot of clean air above here for cocoa to fill. So cocoa actually is quite a nice trade right now. It's starting to ramp up. So we will continue to hold our cocoa position. Coffee, we've also got a longer term position on as well. Coffee is continuing to consolidate. I wouldn't get into coffee actually at the moment. I would continue to wait. Cotton is also worth keeping an eye on. Retraced recently back down to the lower end of its trend channel. Although I do favour for a new opportunity at the moment, cocoa is moving quite well. Sugar, of course, we've seen sugar up 29% year to date. It's had incredible moves over 2016, and we have got to a very extreme overbought condition, so we might correct a bit further here on sugar. But overall, the softs remain pretty strong here going into the Brexit vote. They're all significantly up on the year, so those are also worth having on your radar. And of course, we'll move over to oil. Oil's price structure at the moment, I would monitor the potential for a breakout above. You've got a few different levels of resistance. You've got 51, 30 and 52 zone as well. Last week, we essentially on the higher time frames, we formed a rejection candle. If you have a look at the price structure of oil on the weekly time frames, we produced a rejection candle last week. This week we produced, or to the close last week, we produced a rejection candle in the opposite direction, a bullish hammer, bearish hammer. So you've got indecision between these two on a weekly and a higher time frame. Oil still does have the potential to roll over and break down, but it could also break out to the upside. It is in a little bit of a indecision mode at the moment, where if it breaks above this trend channel over the course of the next couple of days, it could follow through, and an upside target will be $55 per barrel. At the moment, it's still in indecision mode. I would wait for a resolution at the moment from the vote before entering into a new position. We did get a lot of support from the 50-day moving average on Friday. We've had quite a big pop, but then on the oil inventories yesterday, we saw oil sell off again, and oil moves extremely well between trend channels. So if you have a look, there's actually a trend channel it is battling with a little bit, which you could argue is a new channel starting to develop, and it might ricochet and move back towards the lower end of that zone technically. So I'm looking out for that. But there is, again, a strong correlation between the polls and also oil. So if we were to see a Remain vote, that would be bullish for oil. And if we were to see a Leave vote, that would likely be bearish for oil. So that's just worth bearing in mind as well. But oil could give rise to a nice opportunity here as well. Essentially, in the short term, it needs to break and close above $50.50 per barrel to get back into the territory from about a week and a half ago at $52 per barrel. Beyond that, upside target is $55 per barrel up above here, which would take you also to the upper end of this trend channel as well, which has been developing. Oil's still moving pretty well between its channels here too. Okay, so I would definitely keep an eye on that as well. So with that said, I hope I've given you a good idea, guys, of some of the opportunities which are likely to present themselves. As it relates to the metals, this is particularly a trade which will be monitoring very closely indeed here. I think the sort of calmer trades will likely be on the agricultural markets, but for the breakout trades here, we're likely to look at certainly the precious metals and oil here as well. So with that said, let me just move you over to our portfolio performance, our trading performance update over the last week, utilizing our exclusive research-driven strategies. So gold, we benefited on the breakout trade. We caught following on from the back of the non-farm payrolls the previous week. We caught the following on breakout above that week's high. So we benefited over 600 points. We came up and hit our profit target after the FOMC, which moved really nicely here. So this was just a swing trade. We continued to stay in, which hit our profit for 600 points here, which was really nice to close out of just after last week's FOMC statement, because we subsequently saw a bull trap. Light sweet crude oil, we did benefit from this. We had been discussing how this market was overbought, came right into our sell zone. We took this right off the upper end of the trend channel once we formed a bearish engulfing candle. Railroad price structure, we got a nice setup at that level and just took it down to the 50-day moving average for a 460 point profit on that trade. And sugar as well, we actually continue to be in longer term positions on sugar, but we banked another swing trade on sugar once it got back into its overbought condition. It hit resistance. It's just been consolidating since this point. Actually, we profited on that trade 310 points profit. So that's a bit of an update for you on our portfolio performance over the last week. If you would like access to highly profitable live trading ideas like the ones I've shared with you today, the analysis I've shared with you today, ready to implement, rather than doing all of that hard work to find them yourself, do all of the research, there is, of course, an opportunity for you to join us at the private members live trading room at the Gold and Silver Club. So whether you are a new trader, you're looking to develop a solid understanding of the markets, fast track your results, or even if you're an experienced trader, but you're looking to really take your trading to that next level, and especially if you want to be trading over the next 24 to 48 hours, you want to be kept updated about the trades which are developing during this potentially once in a generation trading opportunity that's going to develop over the next 24 hours here. And as we head into next week, make sure you get on the right side of these major trends. Very simply, there is an opportunity for you to join us at the Gold and Silver Club. As a member of the private members live trading room, you get exclusive weekly live trading room webinars. You join us for all of our live trading room sessions. You get live trade recommendations ready to implement. You get notifications of those sent by email, so you don't miss a profitable trade. You get exact entry, exit, stop loss on each of the trades. We just share with you our exact entry, exit, stop loss, any trade management on those as well. You get live trade support to help you through each trade, customized technical charts and indicators to boost your win rate, and exclusive access to our proprietary trading research to give you the ultimate edge in the markets, plus much more. So to get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldandsilverclub.com. Complete the application form and we will get in touch with you ASAP. So it's www.jointhegoldandsilverclub.com. Also, if you have any questions, feel free to call us either at our UK office, our US office, our Africa office, or our Asia office. So feel free to contact us on either of those numbers. And again, guys, to make an application, very simply, it's www.jointhegoldandsilverclub.com. Also, feel free to subscribe to our YouTube channel, which is very simply the Gold and Silver Club, to be kept updated with our latest TV interviews, our latest reports, research, our latest weekly videos. So make sure you also subscribe to our YouTube channel at the Gold and Silver Club. Okay, fantastic. So with that, guys, it's been a pleasure, and I hope that gets you all set and ready for trading Brexit over the next 24 hours. Look forward certainly to working with those of you who will be making an application and joining us at the Gold and Silver Club. Again, feel free to contact us on any of the numbers here, depending on which is your closest office there. And good trading, guys, and we'll speak to you real soon. So thanks again. Thanks to FX Street for hosting today's session, and we'll speak to you all real soon, guys. Okay, take care. Have a fantastic weekend too. Thank you, guys. Bye-bye.